Hey everybody, PJ here from Exotic Car Hacks, and today we're going to be talking about the October market update. Now, I know it's already October and a lot is changing this year as it pertains to the car market. You may have seen people talking about the bubble bursting and many cars going down in their values. So what is happening in the market? What should you be aware of? And how have things changed? So we're gonna break down today's market update by three basic things. Pricing of cars, which is important. Allocation of cars, which is new cars. And finally, finance. So by talking about these three things, you'll have a good idea of what's happening in the market, what to prepare for, and how to ensure you don't position yourself poorly if hacking or buying a car in the next few months. In addition to that, I'd also like to say that, of course, having done this for the last 20 years, I have a pulse on these things, and I've been in the market so often from the place of both retail buyers, retail sellers, dealership, and dealership wholesale. So while there are other people who look at the bottom dollar of cars in auctions and things like that, I am giving you a more complete and lateral view of the real market, not just the things that are happening at auctions where the worst exotic cars are being traded, and often exotic cars that honestly shouldn't even be in circulation, period. But the many people that don't have exotic car hacks or don't understand how this works will typically just buy a price alone, end up with these terrible atrocities called cars, and ultimately end up being terrible experiences of exotic car ownership. So where is pricing going? Are we seeing drops across the board? What is happening? So two folds to that. Newer and more exciting cars people want are still in short supply, and so as a result, pricing still has not collapsed by any means. It is slowly going down. Now, I want to point out that historically, an exotic will go down kind of to a midpoint segment, then hold steady, and then start to rise back up. That is a normal depreciation curve for an exotic. Now, during COVID, you may have noticed that exotic cars went up all the way up from the very beginning, not really creating a dip by any means of how they depreciate or anything else. Now, this is important to note because the COVID model was obviously just a temporary model, but something really interesting is happening, and I've been talking about this over the last year, about how the US model has become the European model. We'll talk about that when we go to allocations. But for pricing, it's important to note that we are now no longer in an up and up and up and up pricing like we were during the COVID era last year. This year, we have seen the adjustment of extremely inflated values on certain cars. You've seen G63s collapse almost $100,000, but you've also noticed that the pricing is starting to go down on a lot of cars. And that is a very healthy and necessary step in the market. And while people today are talking about the bubble bursting, it really hasn't. On certain cars like G63s and things that were overvalued, those things have come to a halt now. However, on other cars, it has slowly started taking its depreciation cycle, meaning that you are going to start seeing newer R8s push down older R8s. And when older R8s have stabilized, then newer R8s will stabilize on top of them. The point that I'm trying to make here is that this isn't a bubble bursting. This is a normal market depreciation that takes its place based on cars being newer. Here at Exotic Car Hacks, we talk a lot about hacking cars that are at least 3 years old. Part of the reason for that is because 3-year-old cars have already taken the majority of their depreciation. Now, during the COVID era, a lot of these cars were not depreciating over 3 years. They were appreciating, creating a lot of confusion. But reality is that previous to that, if you've been around and part of Exotic Car Hacks for a while, you've seen normal depreciation model, and we are not going back to these normal data or concepts of depreciation. But I will even argue our depreciation model has now hit an even higher plateau than it did before, because back in the day, you could have bought, for example, a really nice R8 V10 Plus that was a 17 for like 125K. And I would argue that now the bottom for that same car is 140K. So while the price now may be like, for example, 160 going down to 140, one of the arguments here is that it's not expected to go back to 125. And that's really important to understand, because the time it's going to take to go from 160 to 140 will be a lot longer than people expect. It is not coming down just all at once as a crash, which is why I'm saying we're not really seeing a bubble bursting, but instead we're seeing a normal depreciation schedule. Also important to note here, we're talking about a $15,000 increase from its price index back then, which is a very interesting angle again for this market. Again, something very different than a lot of people are talking about. Now, one thing you'll notice with pricing is you'll notice some deals that are what we call pocket priced. Now, pocket price deals means that certain dealers are struggling and they're going to dump certain piece of inventory a little bit cheaper to market. I'll give you a good example of that. We took a Cadillac Escalade to auction. That car should have easily brought like $110,000 at the auction, and every dealer is asking $140,000 for that car. No dealer even bid on the car, not even like 90, not even 80. This is really awkward. So does it mean the car was not a good car? Well, no, it actually sold for $125K. The point I'm trying to make here is that, again, sometimes we're looking at these pocket deals where dealers are afraid they're not buying, and other times we're looking at the same dealer saying, I'll dump everything, I'll dump anything just because I'm scared and I don't have any money. So what's happening is you're gonna get these pocket deals where someone could have gotten a great deal on that truck that day, right? But they didn't bid. And so someone else could take advantage of these pocket deals out there. So don't allow pocket deals to turn into pricing index, because it isn't accurate. Look at pocket deals no different than you would look at a foreclosure in your neighborhood, not really an indication of its true market value. So that's how we cover pricing. Now let's talk about allocations. Allocations are really important. This is about how many people are still getting new cars, meaning you remember that I've said the US model of stacking a ton of cars on the lots and having people walk in and buy them is over. Now dealers are going on an order basis, meaning they will only stack very few cars or canceled orders, and the rest of the orders will be fully allocated to people, which means that you will have to wait on average 6 to 8 months of production time, in addition to probably 4 to 6 months before that of getting an allocation time. So this is on more popular cars. We're looking at Porsche still being about 20 months out. We're looking at Ferrari being about 16 months out. We're looking at Rolls-Royce being 12 to 14 months out. So all of these brands, again, are still on a delay of delivering cars. This is important to note because that gives us a good foresight of the fact that supply is still not going to come back in full the way people were expecting it to post-COVID. And this is because manufacturers have changed their models and they don't want these dealers to carry so many cars. So that is why the used car pricing is still going to stay strong for quite some time. Now, allocations are important. We're still seeing Lamborghini sold out of allocations. We're still seeing Ferrari sold out of all the desirable allocations. We're still seeing Rolls-Royce sold out of allocations. So even Bugatti is sold out of allocations. So if you start looking at the higher end market, people are still spending in that higher bracket of 500K up. And more importantly, not only are they still spending money, but they're still not backing off of orders that were placed prior to this. A big misstipulation from people was that once Bitcoin has crashed and the markets have crashed, all of these past orders are basically going to get declined. You know, like people aren't going to take them, so there's going to be a ton of inventory sitting on the markets. But it hasn't been the case. And people are realizing that in many cases, because used pricing is up, the new pricing still makes more sense for them, so they are still taking their cars. This means that on the used market, they are still having a 6 to 12 months leverage on being able to resell that car and not lose any money. That is why people aren't giving up their allocations. It makes more sense to buy a 23 Urus brand new than it makes to buy a 21 Urus used. This is the way this is happening. But I also want to point out something about allocations as it correlates to pricing, something people aren't paying attention to. Allocations are one thing. MSRP pricing has gone up almost 17% across the board. So as an example, a 19 Urus had an MSRP fully loaded of $260. Now the 23 Urus has the same fully loaded MSRP at $350. That's a $100,000 increase between the two for essentially the same looking car with a few upgrades. You have to understand that this means that the 19 Urus is a bargain, even used at $240 with 30,000 miles. This means that, again, there is a market at each of these segments because the new market has also risen up. This is very important to understand. This is one of the reasons used car pricing and new car pricing have been incredibly stable despite the fact of the liquidity leaving the market and everything collapsing. People are talking about G-Wagons crashing. We just talked about that a second ago. Something to consider. People are talking about 2020s, 2021s, and they're talking about these 22s that have gone down and collapsed. But you have to understand something that's really important to understand. If we're talking about a 2022 or 23, we're talking about very different MSRPs. You see, the average, and this is going to be pretty crazy, 19 G-Wagon had 160K MSRP. Then in 20 and 21, that same MSRP went about 180, okay? Now in 22, it went about a 205. Now in 23, it's about 225. I want you to understand that there is almost a $75,000 difference between a 19 and a 23 essentially being the exact same car. So this is something very important to understand. When you're talking about buying a 19 at 200, you're talking about plus 40 over MSRP used, right? So this is what I want you to understand, plus 40 over MSRP for used. If you're buying a 23 at 225, that's MSRP. So what I'm saying is, like, these types of financial models are something we discuss a lot in Exotic Car Hacks, but the public is not really prone to this or understand this. So this is why it's so important to understand that this is one of the reasons pricing seems to be all over the place, but it really isn't based on years. Now, the final thing we're talking about here is finance, which is really important because obviously the backbone of everything is the finance models are backed by how much of these cars get moved, etc. Banks have relaxed their guidelines again, not going over too much, but still back up to 100%. Now, for 6 months, I predicted that they would be under that, and they did move to 80% LTV for the most part, using the lowest NADA record. Now, banks have gone back up to 100%, which means that they are not as afraid of what's coming as it pertains to the car market, because they believe the valuations have settled now to a point where they're comfortable going back to 100%. This is very, very important to understand because this gives us a gauge of the future. Banks aren't as afraid of the future of the car market as much as they were 6 months ago. This is very, very important news, so we have to keep tabs on this and understand that. But this has been a generic market update for all of you guys, regardless that you're Exotic Car Hacks members or not. If you want to learn more about how to turn consumerism into investorism and put yourself in a position of actually growing a portfolio of investments in cars rather than being a consumer of cars and losing money each and every time you trade out of a car, you need to join us at Exotic Car Hacks. Click the link anywhere on your screen and learn more about this incredible concept of looking at cars no different than stocks. So I will leave you here. Again, I hope you've enjoyed this, and I'll see you inside Exotic Car Hacks.